Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be breaking down my M1 Finance account. I have 3 accounts with them. I have a growth, a dividend, and a Roth IRA account. We're going to be breaking down all 3 of them and really how to use M1 Finance, and is there any fees or anything you guys should be worried about when investing and using them as your broker. So I hope you guys enjoy it, and if you guys get anything in value, make sure you guys hit that like button, subscribe to the channel, and go ahead and check out my course. It's $5. We talk about how to properly invest in the stock market. We talk about fundamental technical analysis. We talk about retirement taxes, everything you guys need. So make sure you guys check it out. It's $5. So now to jump into it, roll the intro. Let's go. Bam. So M1 Finance is a stockbroker that really allows you to buy and sell stock commission free, and there's really no major fees behind it. And yes, you guys can sign up with margin, and there is some fees, and you will have to pay some stuff if you guys use margin. But with the one rule of investing, never borrow money to invest, I don't think you guys will ever have to worry about any fees or anything like that when you guys use M1 Finance. Another awesome thing about M1 Finance is it's like creating your own ETF. So you can put different stocks in it, and you can put different ETFs in it, and honestly, it's a perfect way to grow your account and use proper risk management. You know, you're always told to have 40% in the S&P 500 and 10% in bonds and the rest in the stock market and individual stocks. But it's honestly kind of hard to do when you just have a regular account. And I think what M1 Finance does is really cool because it's almost like pie investing. So you automatically invest 40% in the S&P 500. You automatically invest that 10% in bonds, and you can pick and choose different blue chip stocks, or even pick and choose different, growth stocks you guys see potential on. Now I do have a growth account that I put around $10 a week in it. It's nothing too big. These are going to be like my high risk plays, and honestly, when I invest in it, I honestly just think I already lost my money, even though I'm already in profit right now. I just think I lost it, and this is like my super long-term account, so I don't really have to worry about it. Now the second account I have with them is a dividend account. Now these are really high quality stocks that I think have a perfect long-term potential. They do pay a dividend, and yes, there is a couple, growth stocks that don't pay a dividend, but like 90% of the stocks and 90% of the holdings actually do pay a dividend, and really that's what I'm focused in on this account, because I want to build up a passive income stream, that pays me $1,000 per month. That's my goal with dividends, because I want to get another passive income. So I do invest roughly $100 or more per week into this account, and I do have a ton of high quality stocks. Now the last account is a Roth IRA account. I just opened this one up here, and the reason why I wanted an IRA account is because there's a lot more tax benefits when you guys are ready to retire. And honestly, all these holdings I have in it are like ETFs, super long term, diversified. So something I don't have to check the price day to day, and I know in the next 10, 20, 30, 40, maybe 50 years, I don't have to worry about, and I think all of them are perfect long-term plays, and I don't honestly have to worry about it. And I do a fantastic job with risk management, making sure I have enough bonds, making sure I'm exposed to really all parts of the market, and I think that's a big and key feature. So now right when you guys load up the account, you guys can see that big pie. That pie represents all the holdings you have in your account. So you guys can see that huge lump is the S&P 500. I automatically invest. I try to do 40% into the S&P 500, and then I do around 3% in Apple because it's a very, very perfect long-term stock. I do around 10% into the Vanguard Dividend Appreciation ETF. I do try to do around 2% in Amazon, 4% in Costco, because I think that's a perfect long-term stock, and they do pay a dividend. I do around 5% in Home Depot. I do another 1% in Facebook, because I think Facebook still has a ton of room to grow in the long term. They don't pay a dividend, it's a pure growth stock, but nothing to be worried about. We have some Dividend Kings coming up: Coca-Cola, Johnson & Johnson, Visa, McDonald's, and Google. And honestly, I do have more. If for some reason it didn't load up, I have Lowe's, I have the ETF QQQ, I have JP Morgan Chase, Microsoft, I have CSCO, I have PFE, I have you know, a ton of them, Procter & Gamble, AT&T, MasterCard, and all of these. The reason why I invest in them is because I think there is a ton of potential in the market. And then me being me, I like to make sure I have defense in my account, and that's why I have this total bond market ETF in it. I get paid a 3.5% dividend, and it grows on average around 5%. This is the only one I'm down right now, which is very surprising because that's my defense in my portfolio. But honestly, this ETF doesn't really move a whole lot. You know, it might go up a couple cents here or there, and I'm only down 37 cents on this holding alone. So honestly, it's pretty cool. This is my long-term dividend account. So honestly, let's move on to the next account that I do have with them. And it's super easy in how you guys can actually like navigate through the app. You guys can go to the growth account, which you guys can see I only have around $130 in it, and I do invest around $10 per week in this. These are like my super long-term potential, long-term stocks. Most of them don't pay a dividend, and honestly, I think it's just fun to mess around with them. So let's break it down and let's go. So the very first holding I do have is Lemonade Insurance. I have AMD, I have Square, Shopify, Nvidia. I have around 10% automatically in Amazon. I have 5% in Salesforce. I have some in Spotify, Snowflake, PayPal, Microsoft, Chipotle, MasterCard, Adobe, Apple, Facebook, Tesla, Rocket Company, and then Google. So those were my high growth, high long-term growth stocks. So those were my long-term growth stocks that have a ton of potential, and they're kind of cool to mess around with. And you guys can see I am up around 3% in them, which is pretty cool. And if you swipe over, you guys can get more detailed information, which is cool. So now let's talk about my Roth IRA account. The reason why I have it, just tax benefits, and everything like that. So starting off, we have VTI, which is just the Vanguard Total Market fund. It's super easy to invest in it, VTI. I do have 17% in that. I have 15% in the S&P 500. I do have another 15% in the S&P 500, but with a different company behind it, with Vanguard in that one. I do have QQQ, which is the, it's like a tech ETF, very heavily in tech. They do pay a dividend, which is cool. Then I do have Vanguard Growth Index Fund, which has a lot of high growth stocks, more long-term growth stocks. And then we have the total bond market. I always think it's super important to invest in bonds because they act as your defense in your portfolio. And once the market falls, right now I have, I have 20% automatically in bonds, but once the market falls, I'm gonna drop that 20% probably to 10 and use that cash to invest in like the S&P 500. And once the market turns around, just like it's done every year, then you make a lot more money and you build up that bond and you just wait again. It's a recurring cycle. And all these I do pay weekly into, so they're growing at rapid rates. And I do have multiple accounts still open. I still have my TD Ameritrade, which is very, very heavy in growth, and I do have dividends in them. It's just more, this is more of just my fun account that I'm really just looking for long-term growth and everything like that. Now, I do have a referral code. Of course, yes, I am a YouTuber and I'm trying to scrape by, but honestly, you guys can get like $10 to invest by signing up. It's super easy to do. Make sure you guys check them out. M1 Finance, no fees. I do think they're a little better than Robinhood, but the only downside M1 Finance has is you can't actively buy and sell. They do have different trade windows, so you can buy from like 9:30 to 10:30, and then if you have the margin account or the M1 Plus account, then you get it in the afternoon. And that's why I just mess around with this account, and if I want to heavily trade, I will use, my Lightspeed or my TD account or something like that. So that is it. I hope you guys enjoyed it, and if you guys get anything in value, make sure you guys hit that like button, subscribe to the channel if you aren't already. I really hope you guys enjoyed this episode, and I honestly hope you guys learned something. I tried to show a lot of transparency with my dividend and my long-term retirement account. So I hope you guys enjoyed it. Make sure you guys hit that like button, subscribe to the channel. We'll see you guys tomorrow. Take care, and I hope you guys have a good one. Take care. Bye.